the first stock on the menu for 2024 is Devon Energy. I made a video about this a little while ago, but it looks like circumstances have changed quite a bit. I was a couple of 100% up and now I'm about 77% up. It has fallen quite a bit since then. So the ticker symbol on the New York Stock Exchange is DVN. It currently costs $45 per share. The next ex-dividend date is the 14th of March and that will be paid out on the 28th of March. I started my position on the 21st of June of 2021 and as of today I'm 80% up. The stock is up about 1.4% in the last month. It's down about 7% in the last 6 months. It's down 22% in the last year and it's up 84% in the last 5 years. 2020 was one of the worst years for oil stocks in about 40 years before then. It has a 52-week high of about $67 and a 52-week low of about $42.50. So a quick overview on the stock, and there's a potential 6 points that it can earn in this section. So Devon Energy was founded in 1971. That makes it 53 years of age and earns it 1 point out of 1. It operates in the oil and gas industry of the energy sector in the United States. So in 2022, they ranked number 7 for the amount of wells that they drilled out of other US energy companies. And that was for a total of 281 wells. And in the third quarter of last year, they operated 16 rigs and 4 completion crews, which was an increase of 81% from the second quarter of last year. It currently employs 1,800 people, and that earns it 0.1 out of 1 point. Their current market cap is $29 billion, which makes them a large cap stock and earns them 1 point out of 1. At the moment, less than 1% of the company is owned by insiders, so that only earns it 0.1 out of a potential 1 point. So throughout 2021 and a bit of 2022, when the prices of oil and gas went through the roof, a lot of energy companies were making a fortune, so their stock price shot up. But now, as we can see from this graph, things are starting to come back down to reality a little bit. Although the prices haven't gone back to what they were before, they're not increasing at the rate that they were. So energy companies are not making as much money. And this is reflected in their earnings, their income and their revenue, which are all down. But on the plus side, Devon Energy ranks better than 80% of about 1,000 companies in the oil and gas industry of the United States. So it is fairly profitable. MarketWatch gives them 16 buy ratings, 4 overweight ratings and 11 hold ratings. TipRanks rates them a moderate buy with 12 buy ratings and 8 hold ratings. A straight Google search is pretty much the same. They have 16 buy ratings, 4 overweight ratings and 11 hold ratings. MarketBeat also rates them a moderate buy out of 16 ratings. They have 11 buy ratings and 5 hold ratings. And the Nasdaq website gives them a rating of a strong buy based on 23 analyst ratings. So although the industry itself is on a bit of a downturn, Devon Energy seems to be in quite a good position. So out of a potential 1 point, I'll give them 0.5. So off to an okay start. In the overview, they earn 2.7 out of a potential 6 points. And for the valuation, there's a potential 4 points to earn. So for last year, their revenue was decreasing quite a lot. At the moment, it's $19 billion per year. And for 9 months ending on the 30th of September 2023, it decreased 25%. The net income applicable to common stockholders also decreased, and that was by 46%, down to $2.6 billion. And their gas segment decreased 68%. Their net income is down 52% from last year. Net profit margin is down 35%. Operating income is down 55%, but their cash has increased by 112%. They did beat earnings estimates by 6% in September, but overall it seems to be pretty bad news. This is to be expected though with the price of oil and gas falling. Their profit margin is about 24% over the last quarter, so overall they earned 0.8 out of 1 point. Their current earnings per share is $9.10 and they have a price to earnings ratio of 4.98. This is well below the average price to earnings ratio of the energy sector in the USA, so that earns them 1 point out of 1. Their debt to assets ratio over the last quarter is healthy 52%. They had $24 billion in total assets and $12.6 billion in total liabilities, so that earns them 0.75 out of a potential 1. And their cash flow. Their net income growth is up 31%. Their changes in working capital has improved from last year. It's at $61 million. Their net operating cash flow growth is up 22%, and you can see from the figures on the far right the 5-quarter trend. Things seem to be improving. And their cash flow from investing seems to be a lot of the same. It's improving as time goes on, but not fantastic. Their net investing cash flow growth is up 18%, and the same can be said about their financing activities. Lots of red, but it is improving over time. Their free cash flow growth is up 160%. So for their cash position overall, I'd give them 0.75 out of 1. Overall, pretty good. 3.3 out of a potential 4 points. And for the dividend, there's a potential 6.5 points they can earn in this section. The dividend is paid 4 times per year. And by the looks of it, they pay a lot of special dividends. Since 2020, they've paid a bonus dividend along with every ordinary dividend as well. Hopefully that continues into the future, but that earns them 1 point out of 1. It pays 72 cents per share, but the amount that's paid fluctuates quite a lot with the price of oil and gas, so it's not very easy to predict. But the current dividend yield is 6%. That earns them 0.5 points out of 1. Their current dividend payout ratio, which is how much of their profits they pay out as a dividend, is 59%. Anything between 0 and 50% is considered stable, so this is still very good. That earns them another 0.5 points out of 1. But as the price of natural gas or the price of oil bounces up and down, so does the dividend. So their average annual dividend growth rate is negative 26% over the last year. It's 105% over the last 3 years, 65% over the last 5 years, and 15% over the last 10 years. So although it is a pretty tricky one to call, I will give them half a point for dividend growth. They've been paying dividends for the last 31 years in a row, which earns them 0.8 out of a potential 1.5 points. But as far as consecutive dividend raises go, 2022 was a big year for them because they made a fortune and they paid a fortune out, especially as bonus dividends. So I'm not going to count 2022 to 2023 as a massive drop, and that will give them 6 years of consecutive dividend raises. And that will earn them 0.3 out of a potential 1 point. So for the dividend section, they also did quite well, 3.1 points out of a potential 6.5. So overall, Devon Energy scored 9.1 points out of a potential 16.5, which is a score of about 55%, which isn't fantastic, but any stock in the energy sector, especially oil and gas, is always very volatile. But for the industry that they're in, Devon Energy is doing quite well, and they do love to pay out their profits as a dividend. So although there is better options out there, as far as a high yield dividend stock goes, and a good income dividend stock goes, Devon Energy is a good contender. But that's pretty much it for this one, and I hope that you found this useful.